Imagine this. The US government, officially the largest holder of gold reserves in the world, decides to sell off its entire stockpile and buy Bitcoin. Yes, you heard that right. The country that apparently holds over 8,000 metric tons of gold, valued at more than $500 billion. It has been proposed that it should abandon this cornerstone of stability for a digital asset. The digital asset that is notorious for its volatility. Is this a good idea? And what does it mean for gold? Well, let's find out. So Michael Saylor, co-founder and executive chairman of MicroStrategy, has come up with what he has termed his evil genius strategy. What is this strategy? Well, dump the gold and buy Bitcoin, because you simultaneously demonetize the asset held by your enemies. Demonetize gold once and for all. So let's break this down. First, consider what gold represents. Well, for over 5,000 years, gold has been the ultimate safe haven asset, a store of value that has weathered wars, economic crises, and market meltdowns. During a number of crises, gold prices have soared while other assets have crumbled. Bitcoin is just 15 years old, and its value can swing so dramatically in just a single day. So why tether the US economy to that kind of unpredictability? Now, Saylor argues that Bitcoin's exponential growth potential makes it superior to gold. Now, sure, Bitcoin's market cap has surged, but let's not forget that it's a speculative asset. It's driven by hype more than substance. In 2022, Bitcoin lost over 70% of its value during a market crash. Imagine staking the US economy on that kind of gamble. And then there's cybersecurity. Gold can't be hacked. It's tangible, it's finite, and it's universally trusted. And Bitcoin, on the other hand, it's vulnerable to cyber attacks, regulatory crackdowns, and even technological obsolescence. Now, are citizens really going to sit by whilst their reserves become incredibly vulnerable? Trading gold for Bitcoin doesn't just jeopardize stability, it hands other nations like China and Russia a golden opportunity. They'd be first in line to buy up US gold at bargain prices, strengthening their reserves while the US destabilizes its own. Now let's talk about Trump's crypto agenda. His administration is doubling down on digital assets, proposing bold moves like establishing a federal Bitcoin strategic reserve. This would involve utilizing seized cryptocurrencies as a national asset. It's an intriguing concept, but it raises serious concerns about both market stability and governance. Trump's ties to crypto are already raising eyebrows. His involvement in ventures like World Liberty Financial, which licenses his name for cryptocurrency tokens, and his appointment of pro-crypto figures like Howard Lutnick as Secretary of Commerce point to potential conflicts of interest. Critics worry that these connections could lead to policy skewed in favor of the crypto industry, eroding public trust and risking economic chaos. So here's the bottom line. Gold doesn't need a rebrand. It doesn't need blockchain buzzwords to prove its worth. It's timeless, it's tangible, and it is trusted by every major economy. Now, while Bitcoin has its place as an innovative, speculative asset, it's not a replacement for the enduring value of gold. Saylor's proposal and Trump's crypto enthusiasm might sound exciting, but they are a reminder of one critical truth. Chasing trends is no substitute for lasting stability. Here are just 5, off the top of my head, implications of what this decision could mean. Market volatility and economic stability. Bitcoin is known for its significant price fluctuations. Transitioning national reserves from gold, a traditionally stable asset, to Bitcoin could introduce substantial volatility into the US financial system, potentially destabilizing the economy. There's an impact on global financial markets. A large-scale sale of US gold reserves could flood the market, leading to a sharp decline in gold prices. This devaluation would adversely affect countries and investors holding substantial gold assets, potentially causing global economic disruptions. National security concerns. Unlike physical gold, Bitcoin is a digital asset susceptible to cyber threats. A significant national investment in Bitcoin could become a target for cyber attacks, posing risks to national security and the integrity of national reserves. Regulatory and legal challenges. Such a move would require substantial changes in financial regulations, policies and infrastructure. The process of liquidating gold reserves and acquiring Bitcoin could face legal hurdles, bureaucratic delays, and political opposition, complicating the implementation even further. Don't stress too much about flooding the market with gold because there are potential benefits for gold. Because if the US were to divest its gold holdings, other countries might seize the opportunity to increase their gold reserves at lower prices, potentially stabilizing or even boosting gold's value in the long term. But I want to know, what do you think? Is this a smart move proposed by Saylor? Maybe you think dumping all the gold is a step too far, but you might think that the US should sell a small portion of its gold and buy Bitcoin. Let us know in the comments below.